In the end of the day, it's all about maybe not necessarily aligning goals, but what I have found is aligning incentives. And so people and sectors bring different things to the party, right? But their incentives might be different. Of course, the big incentive is we all want to do good in the world. We all want to make a positive difference. But we get at it through different means.
Welcome to System Catalyst, the show that cracks the code for making the world a better place. I'm your host, English Saul. Today, I'm speaking to Shamina Singh, founder and president of the Mastercard Center for Inclusive Growth. Under her leadership, the center has been named one of Fast Company's most innovative companies, and Shamina herself has been recognized by American Banker and the Financial Times for redefining corporate leadership and social impact. Before Mastercard, she held senior roles in the White House and the U.S. House of Representatives. And today, she continues to bridge business, government, and philanthropy. Shamina, welcome to System Catalyst.
English, thanks so much for having me. I'm excited to be here.
We're so excited to have you. And I want to dive into these questions, but really first, I just want to know, is there anything lately where we're kind of hitting that point in the year where things start to feel, I don't know, at least for me, a little bit more chaotic. And so I wonder if you might share with us if there's anything that you have that sort of helps you ground or find peace kind of in these times. Anything you want to share for our listeners?
I don't know about you, English. I mean, for me, I love movies. And so
yes.
I make it a point to go to the movie theater. And so this is also the season where those sort of Academy Award picture contenders are kind of coming out. And so I love going to the movies. It's a great place for me to go, eat some popcorn, maybe some candy, and just kind of like chill out for a couple of hours, which really helps me.
That's awesome. It's funny you say that. We love going to the movies too as a family. And so just this last week, I took my kids to see part 2 of Wicked for Good.
Okay. Yeah.
And they loved it. It was such a good time. And now, the house is filled with them singing all of the Wicked songs. And so it was a nice little holiday moment for sure.
That's great. That's great.
Yeah. Well, Shamina, I want to dive in and, I know that I'm really excited to talk about how you came about sort of founding the Mastercard Center for Inclusive Growth. I think that that's really and really telling our listeners kind of what it is, what you do, and what system you're working on and changing. But I'm curious if you could tell us a little bit about your background before founding the Center for Inclusive Growth and what your life looked like kind of ahead of that. Yeah,
I think it's a great question. And it does provide a little bit of context, especially around systems change, because growing up in the South, I understand you're in North Carolina. I grew up in Southern Virginia, but, grew up with the daughter of immigrant parents, but spent most of my early career actually in the public sector. So I came out of political organizing, and worked on some political campaigns in Virginia and in Texas, and actually moved to Texas to work for the governor of the state of Texas, who was running for re-election at the time, Ann Richards, who became a lifelong mentor. So I spent a lot of time in political organizing, but also on the policy side of the house. I served in the Clinton administration, where I ran an office for the president, working with Asian Americans and Pacific Islanders. Also worked on healthcare in the Clinton administration from the perspective of employer-based healthcare. So there's a little known fact that the U.S. Department of Labor is actually the regulator of any healthcare that comes through your employer, and the Department of Health and Human Services regulates healthcare related to seniors under Medicare and underserved populations through Medicaid. And so the bulk of Americans are actually regulated by the U.S. Department of Labor. So that's where I worked in my early days of public service, working on healthcare, employer-based healthcare. And that's an important point that I wanted to raise, only because I've seen policy from different sides of the equation. And so when I moved into private sector, if you will, having worked in public sector and social sector, moving into the private sector many years ago, first with Citigroup, then with Nike, and then with Mastercard. This notion of trying to see things from all perspectives, both from profit, nonprofit, policy, where the levers are in a system, became really important as we, looked at creating something called the Mastercard Center for Inclusive Growth.
Wow. So, clearly so much of your experience kind of amounted to a lot of what you're working on now with the Center for Inclusive Growth. Can you tell me a little bit more about the through line and the threads of working in public service as it relates to what you're doing on the day-to-day now?
But basically, the Mastercard Center for Inclusive Growth was created. We founded it as a way to leverage private sector assets in service of people and planet. That's essentially the component of what we do here. Having come out of public sector work, what I realized was that, governments have different levers. Obviously, the budget is a huge lever. So, if you want to have a massive impact on a huge population, obviously, the government, public service is a way to get at that. The thing that's interesting about private sector impact, though, is that when you're in a place where time is in much shorter increments than sort of the policy clock, which could be a very long time frame because you're obviously working on maybe the legislation and then the implementation through regulation and then public comment and then potentially litigation through courts and things like that. It's a very long time horizon sometimes when you're thinking about systems change through government and policy work. On the private sector side, because the timelines are relatively short, sometimes year to year, sometimes quarter to quarter, the notion of having impact, systemic impact in this case, takes on a different meaning. And so when we started the Center for Inclusive Growth here at Mastercard, we looked at private sector impact from a different lens, and from a lens of thinking through what the business side of the equation, how we could leverage, in some respects, business processes in order to facilitate change at scale more quickly. And that's a different conversation. It's a complementary conversation, but it's a different conversation.
And how do you find, just really tactically, in engaging in that conversation? It sounds like you're having to coordinate a lot of actors and trying to align goals from kind of different sectors that may have different ways of doing things. So how do you find that collaboration works?
Yeah, English, it's a great point. And I'm sure many of your other guests have talked about the ways that they do this, because in the end of the day, it's all about maybe not necessarily aligning goals, but what I have found is aligning incentives. And so people and sectors bring different things to the party, right? But their incentives might be different. Of course, the big incentive is we all want to do good in the world. We all want to make a positive difference. But we get at it through different means. And so the ability, I think, and the importance of really trying to understand the incentives, like what do they have to go back and tell their stakeholders, or, and really trying to understand that, I think is an important part of the work together. So collaboration, as an example, may look different in different cases. In one sense, we work with, I'll give you an example of a partnership we have around financial inclusion, which is something that Mastercard over 10 years ago made a commitment that said, look, we want to, make a positive difference in the world, but we also understand that we are operating in an environment that includes customers, includes employees, includes shareholders, includes governments, to your point around many actors in the space. But we landed on financial inclusion because for a payments company like Mastercard, so for a company that basically connects buyers and sellers who don't know each other and may not trust each other, we bring the trust to the equation. So we build a set of rules that allow people to transact globally multiple times a minute and multiple times a day. It's for those, because many people think that I just want to do a little bit of maybe explaining a little about what Mastercard is, because I actually think that's an important context to have, which is a lot of people think that Mastercard is a credit card company that gives you your credit card. Partially true, but not all the way true, in the sense that we actually don't do credit scoring. Banks are the ones who give you a credit card and do your credit scoring. Mastercard is and Visa for that example it's the technology rails that actually, when you transact, a message goes out to your bank, a message goes out to the small business owner's bank, a message goes out, to various financial institutions in a blink of an eye that says, English is who she says she is. English is, has this much in her account, or is good for the money. And they do this whole transaction. And that's kind of what the technology behind a Mastercard rail does. Ultimately, what that does is it produces a lot of data, especially in a digital economy. And what that data allows Mastercard to do, along with banks and fintechs and others, is sort of start to help with decision making with a more evidence-based approach. Now, English, that's a long-winded way of basically saying that when you are working for a company like Mastercard, the ability to have positive impact goes to every single, potentially, 3 billion cardholders on the network, 100 million businesses, including many, small business owners. And so the ability to include people in the formal financial system becomes a business incentive as much as it is an impact incentive. And that's why, coming back to this notion of incentives, when we landed on financial inclusion as the business strategy, but also as the impact strategy, it was an incredibly important moment, because we married the impact with our business strategy and communicated that to our stakeholders. So that was our message going to our shareholders. Check the box. They understood that the incentive was, for a payments company, if I'm somebody who's buying shares in this company, I understand that the more people who, maybe not today or maybe not tomorrow, but at some point can transact in a payment system, that's good for me maybe as a shareholder. From a government's perspective, they have government programs where a lot of times they're distributing their social subsidies in cash. So, maybe not in the United States as much, although sometimes in the United States, but in many countries, when I first joined, governments would be dispersing, your food subsidy payment or your living subsidy payment in cash, which means a lot of corruption would take place. We've seen it also maybe, sometimes with refugee scenarios where, you have a lot of cash changing hands, and that becomes a safety issue, especially for women who may be trying to get the resources for their kids. But it's also a corruption issue. So government's incentive was to say, wow, if we can digitize all of these transactions and these programs, that's good for us as a government. So let's make sure that we're creating a regulatory environment that supports that kind of engagement. And then from a nonprofit's perspective, like an organization like a Mercy Corps, who may be helping refugees, or a CARE, which may be, help working on a lot of small business programs with women or sending care packages to different markets, their incentive is to ensure that the receiver actually gets what they're supposed to be getting, and that they're giving their donors a way to say, look, we're delivering on the promise that we make to you as donors to make sure that we make a difference in the lives of people. And then they're actually delivering with impact. So you can kind of see, English, how lots of different actors, but really trying to understand, okay, what are the incentives to ultimately create the impact that we all seek? And that's sort of a long example, but a technical example of sort of how it all comes together. And we've seen this over and over again with the various programs that we have built inside the center as well.
No, absolutely. So this is very helpful, that illustration of and it makes a lot of sense to me. We just had Michelle Nunn and Rick Stingle on the podcast.
Oh, okay, great.
Yeah, so and that's exactly, even some of the examples that they were talking about, the importance of kind of a trusted networked platform.
Yeah.
And so it feels like a no-brainer to me to sort of say, okay, if Mastercard already has, as you refer to the technology rails, and we can align incentives around sort of, the utility of that technology and the impact of what that technology can do at scale in an inclusive way.
Yeah.
It seems like a win-win.
Yeah. So, I mean, I don't want to take us back to a dark place, but if you remember COVID, that was really the moment where I think people around the world realized that if they weren't part of the digital economy, they were going to be in trouble. Mm-hmm. Because what we saw during COVID were, people in our case, who were living in cash-based economies or, who couldn't connect to a platform that, had some kind of service or provided some sort of business. It was really tough for them to survive. And I think it's those moments historically that sort of provide that level of a reality check that flips the switch on a system pretty dramatically. I'll just sticking with, since you had Michelle on, I'll give you an example, I think, of a partnership that brings us to life in a way. With CARE, what we have a program that we call Strive, and Strive is basically a small business initiative that seeks to do well by doing good, in the sense that it works with small business owners around the world. In this case, I think we've connected with over almost 20 million small businesses in the past maybe 5 years, to really help them succeed and grow in a digital economy. Well, it's one thing to have the conversation with a small business owner, maybe in Detroit, who may have access to the internet, may have access to tools, but needs the know-how, right? Mm-hmm. So for these business owners, we sort of think about three things. We want to help them go digital. We want to help them grow their networks and know-how, and we want to help them get capital. Those are three things that we know from small business owners. They tell us they need help with. So with CARE, we said, look, there are small business owners in Detroit who may have access to capital or digital, but may need help with the know-how. If we're working with small business owners, in this case, women small business owners in Pakistan and Peru, what are the barriers that they might be facing to starting a small business? And how do we look at those, again, through the lens of incentives and partnership? Well, what we found in Pakistan and Peru, where the blockage was around the regulatory blockage. So in Pakistan, as an example, you have to have your spouse or a male member of, or father or male member of your family co-sign a loan for you if you're a woman trying to start a business or open an account. That's sometimes hard because a woman, it may be tough to make that happen. So we worked with CARE and the central bank in Pakistan to say, hey, what if we were able to work with you to say another co-signer, but it could be somebody, a woman in your lending circle, a woman who is maybe going to, knows your business acumen and can vouch for you. Would that be okay? And they accepted that. They sort of said, let's try it. Let's see how we do. The other bit that we worked on was recognition of gold as a commodity, as collateral. Because think about it. A lot of times women don't have collateral in the same way men. They don't own land necessarily. They don't have the tractor that they're farming with. But a lot of times in Pakistan, in India, in the Middle East, and some of these markets, gold is their commodity. They get it when they get married. They get it through, through different systems. So we work with the banking system and the regulators to recognize gold as collateral, and they did. And once you start to change the system in what we think of as minor changes make massive impact. That unleashed and unlocked capital flowing to these women to own small businesses. And what we've seen is a huge uptake in business growth in these markets among these strivers. There's plenty more examples of, systems change tweaks that have unlocked know-how, productivity that I could talk about. But that's a very specific example of how business comes together with a nonprofit, with a central bank in this case, to serve and work with the information coming from the small business owners themselves to make a difference. And I can say that is something that we are replicating over and over and over again.
That's amazing. And I have heard of this program and feel very excited to be kind of on the periphery of having watched a lot of that systems change take place. And, I wonder, as you're talking about that sort of replication, what has it been like to sort of take the learnings from some of these programs like Strive and then try to sort of take the bits that really make sense and replicate it in a new or different system or newer and different environment? Has that occurred much in your time?
It occurs all the time. Because the program is global, we see strivers in Mexico. We see strivers in India, in rural India and in the cities in India. We see strivers in Detroit. We just had a strivers roundtable in Detroit where we brought them together to constantly learn and understand what do we need to be doing differently to make sure that they're continuing on their journey. And so we started a program in India where we worked with a bank to lend small business owners who are falling through the cracks, what we call missing middle. Because sometimes what we find are, whether in the United States or anywhere, you might be too big for your credit card. So a lot of small business bootstrappers are using their own credit card, their friends and family to, succeed in business. But then they're too small for a regular bank loan, right? They fall in this crazy category. So in the United States, we have something called community development finance institutions that sort of serve these neighborhood level. They're very personalized and they can give you credit or give you lending, but it might be at a slightly higher interest rate, but it provides you the ability to get capital and that qualifies you for bigger loans down the road. Outside of the United States, they're often called microfinance institutions, MFIs. So in India, we worked with the government, the U.S. government, but also the Indian government and banks to create $100 million risk capital pool. So we put in some philanthropic capital, the government put in some capital, but what it allowed us to do was to lend to small businesses using different forms of credit. So alternative forms of data as proxies for credit. We talked about gold before. We talked about the regulation. There are other things you can use as proxies for credit score. We've developed a lot of training around how to do that. We were so successful with that program, about 8,000 small businesses who had never received a loan from a formal bank received their loan and paid it back. Wow. It's been a 99% payback rate for the fund.
Wow.
That we replicated that model with the Asian Development Bank, but for $1 billion. That's an example of really taking a relatively small thing. We saw the CDFIs, we saw the MFIs, we saw what was working and what wasn't working. We decided to create a relatively small capital pool in India to test it. Once that worked, we created a big capital pool now in Asia that's scaling in Asia. And we're working with other development banks to do similar types of funding mechanisms in Latin America, in the United States, and in other places.
So, Shamina, what I'm hearing is like there's just been so many. Like, I really appreciate all of your illustrative examples of like actual witnessing of this growth and this systems change. And so, even before your current position, it seems like you've spent, your entire career bridging sectors and building coalitions and activating momentum in kind of this idea of a lot of the proximity to networks or the proximity to platforms and access. So in that vein, is there any advice you might give to our listeners who are either trying to fund this type of work or actually get involved and be system catalysts themselves?
Sure. One, thank you again for including me on your podcast, because it's like, I feel like people like you, English, are connecting, right? So you're sitting in the space and you've got a lot of listeners, and if just a percentage of them hear this and decide to act, then you've connected them to a network that they didn't have. And in this case, it's the network of information, and even more specifically, the information around the Center for Inclusive Growth. So I think the advice that I would have is to open your mind. But what my mentor, Ann Richards, actually taught me was to be open to change your mind. So things sometimes don't work, and things you thought would work, or think the way you thought it would go, or who you thought it would go with, sometimes doesn't turn out to be that way. But the process of starting and the process of being in the space and moving, you learn and you can iterate. So change your mind or be open to change your mind is sort of the advice I would give. And then the model that we employ is, we call it test, iterate, scale. Like, we test with that evidence base, we iterate with that programmatic impact investment, and learn and double down and get in there and roll up our sleeves and really try to understand what's happening. And then we scale. But then as we scale, we continue to test and then iterate and scale and learn and test and iterate and scale. And so it's sort of like, I think the advice I would say is, keep an open mind, change your mind, and remember that, things can happen incrementally, but if they're happening systematically, that's when we start to see the scale that will change the world.
That's really spot on. That's such great advice, Shamina. One last question I have. I've been this season trying to leave our listeners with kind of a reflection question at the end of each episode. So is there a question that maybe you could leave us on to ask our listeners to talk through or think about maybe tonight at the dinner table?
At the dinner table? Well, having just come out of the holiday season, maybe they've had enough with the family dinner table conversation. I don't know. Or maybe they're going to have even more conversation.
Maybe on the commute home then.
Maybe on the commute home. So, one, they should be listening to your show. So let's start there. So I think that's thing one, is make sure they're listening to English. I think the second provocation may be, what I would think about potentially, this is the stuff that I think about is, did my day matter?
Mm.
And as you look back on the time that you spent in the day, what were the interactions that really helped your thinking? What were the interactions that potentially weren't the best use of your time? Because I think that there's an economic term called sunk costs. And there's an economic term that says, if you're spending your time, energy, or money in one place, you're not spending it in another place. And recognizing that time is your asset. On my best days, this is not something that I do every day, but on my best days, I will take a minute to say, was today the best use of my time? And then how would I do it differently? And so maybe that's a question for your listeners, is think about, where are they spending their time? How are they spending their time? And is it the best use of that time?
That's amazing. I'm going to write that down on a Post-it and stick it on my computer. Did I spend my time? How did I spend my time today? Was it the best use of my time? Shamina, this has been so enlightening. Thank you so much for coming on the show and talking to us about all of these really unique models and all the things that you guys are doing. And really just so excited to get this podcast out there for our listeners. And so thank you so much.
Thank you so much for having me.